Oh, okay, guys, welcome back to Chapter 6. I'm having some technical difficulties today with my recordings. I hope that this works better. So, we are doing the Earned Income Credit, and this is, by the way, my third recording, so I hope that I cover everything I'm supposed to here. Um, the Earned Income Credit begins on page, I think, 6. Yes, at the very bottom of page 6. On page we're going to skip over 7 and 8 because that was the child tax credit. Page 9 talks about the different rules for figuring out if somebody qualifies for the earned income credit. And I'm going to pull up the slides here. So in the slides it talks about this being a refundable credit. This is really cool. In the child tax credit, if you didn't have enough tax to offset this credit, or then you didn't get to take the whole credit. So let's say that you only had $100. No, we'll say you had $800. $800 in tax, but your child tax credit was $1,000. Well, you can't take the full $1,000 because that's going to show that you have a negative tax of $200. In most credits, you can't do that. You are allowed to take as much credit as you have in tax to offset. But in the earned income credit, it doesn't work that way. You can have a negative tax. It can take you into the negative and give you a refund for money that you never owed in the first place. That's kind of cool. Another big a couple more important things is all parties must have valid Social Security numbers. If you had a child that year and you want to take the earned income credit and you're claiming one child, if they don't have a Social Security number, you cannot claim them. So that's important. Now, if you receive that Social Security number by the time you file your tax return, then you're fine, as long as you have it by then. And one more thing is that if you have a filing status of married filing separately, you are not allowed to take the earned income credit. Married filing jointly, yes. Head of household, yes. Qualified widow, yes. But not married filing separately. So that's something to keep in mind. I'm going to reduce, actually I think I might have a couple more things I want to talk about. Nope, that's all of them. Okay, so on the next page, page 10, in our textbook, it talks about on 6-2C near the second half of the page, it says taxpayer with no qualifying child. Sometimes, depending on your income, people with no qualifying children can still claim the earned income credit. So we're going to see some examples. So let's look at the examples up at the top. The first one, Doug is married but files separately in 2017. We already answered that, didn't we? He does not qualify. I'm going to skip the second one. The third one is about a couple that has a baby that year, but they haven't gotten a Social Security number. Okay, so they can take the earned income credit if they qualify with no qualifying children, but they can't say that they have one qualifying child unless they have that Social Security number. The last example is one I wanted to look at. Jerry earns wages of $16,000 from his job and has no adjustments or other forms of income. So it's really important to know, what is your earned income? Your earned income is what you earned at your job. If you own a business, it's what you earned from your business. Your unearned income, which is included in AGI, are things like dividend income, interest income, things like that. I think we talked about this in one of the previous videos. So it's important to know those things. So he has no qualifying children, no investment income. Even if Jerry meets the other qualifications, he will not be eligible for the earned income credit because his AGI exceeds the threshold amount. Let's look this up. Let's go back to Appendix B in your textbook. And I don't have an example of this to show you in the video, and I can't seem to record myself, otherwise I'd hold it up and show you. So in Appendix B, $16,000, I'm going to turn to page B-5. I'm going to find the line that is at least $16,000 but less than $16,050. So remember, at least but less than works the same as it does in the tax tables. He's single with 0 children, so his earned income credit is 0. If he had just one kid, his earned income credit would be $3,400. With 2 children, $5,616, and with 3 children, $6,318. So the more kids you have, it stops at 3, but the more kids you have, the better your earned income credit. Let's jump ahead to, let's say that we have a married filing jointly with 2 kids, makes $43,980. That's the very last line on page 9, B9. $43,980. So it's at least $43,950, but less than $44,000. Married filing jointly is over in the second set of columns. If they don't have any kids, they don't get an earned income credit, but they have 2, so their earned income credit is $1,395. So if that doesn't really make sense to you, I want you to stop the video, go back to the first example I did of the 16,000, and look these up in the book. Sometimes I talk a little bit fast, so you have to kind of stop and rewind a little bit and listen to it and stop and find your place. Okay, so now I want to talk about this earned income credit worksheet. It says at the very top, enter your earned income from step 5. Well, I don't see a step 5. Where the heck is step 5? It's a different worksheet altogether. It's this thing. It says step 5 at the top, your earned income, and I'm in the process of changing Blackboard to reflect this properly, because I think I labeled it credit limit worksheet. It should say earned income. Okay, so you're going to follow and do everything it says here. Enter the amount from 1040A, line 7, and keep in mind that none of these credits are done until you've calculated your tax liability. So on your 1040 form, let me find that one. Your 1040A, excuse me, I said that wrong. Your tax is line 28. If you had some qualified dividends, then you're going to have to use the qualified dividend and capital gains worksheet to calculate line 28. If you don't have any qualified dividends, then whatever you got on line 27, that's what you look up in the tax tables to get line 28, your tax. And that's your tax liability. So you need to have that before you can start working any of these worksheets, any of these credits. So let's go back to our worksheet. It says look up the amount from line 1 in the earned income credit table and enter it here. And then it says if line 2 is 0, stop. You can't take this credit. Okay, so remember what I said at the very beginning of this class. If you are given a form and you think you don't need it, stop what you're doing. You've probably made a wrong assumption, because I'm not going to give you something you don't need, and I'm not going to forget to give you something that you really did need. You can't, let's see, enter no, okay, let's see here. Then line 3 says enter the amount from 1040A, line 22, which is our AGI. Are the amounts on line 3 and 1 the same? If they are, then we answer yes here. We're going to put a check mark in yes. Skip line 5, enter the amount from line 2 on line 6. Down here under line 6 it says enter this amount on the 1040A, line 42A. Let's go to the 1040A, line 42A. Our earned income credit. So that's what's going to go here, that credit. If we answered, let's go back to this thing. If we answered yes, no, that they're not the same, then we need to go to step 5 and answer these questions. Do we have any qualifying children? If no, is the amount on line 3 less than $8,350, or for married filing jointly $13,950? If we answer yes to that, we're going to leave line 5 blank, enter the amount from line 2 on line 6, and move forward. If we answer no to that, or if we had no qualifying children, it says look up the amount on line 3 in the earned income credit table. So basically what it wants to know is if you meet these thresholds or not. If you had 1 or more qualifying children, you just go to the next bullet point right here and do what it says there. So if you aren't less than these thresholds, it wants you to look these up, and it's only going to allow you to take the lower of the two, which is what it says right here. Look at the amount on line 5 and 2, enter the smaller on line 6, and then whatever you have on line 6 is your earned income credit. So I think that covers the earned income credit. So that's it.